7 monthly paying dividend stocks that are currently on sale, or if not close to being on sale as of right now. Now, monthly paying dividend stocks are great because you get paid more frequently than that of, say, a quarterly paid dividend stock. And with those more frequent payouts, you can of course reinvest the cash a lot faster into, say, maybe more monthly paying dividend stocks, or of course use that cash to pay bills on a monthly basis. Now, the first monthly paying dividend stock that is on sale as of right now and offering a higher dividend yield than we have seen it offer in many years is Agree Realty, or ticker symbol ADC. Now, as far as REITs go, Agree Realty, in my humble opinion, is one of the highest quality REITs across the board, and definitely do some more research into ADC if you do want to have some more exposure to some high quality real estate. But as far as some of ADC's stats, it has a 70 on the dividend safety score, which means the dividend should be very safe moving forward, and most likely will not see any dividend cuts in the future. As far as the starting dividend yield for Agree Realty, we're at a 5.24%, which isn't too bad at all. Now, what's awesome about Agree Realty is that it has actually had some really decent growth as far as share price return. The stock is up almost 200% as far as all time goes, and that's of course not even including dividends. But as of right now, Agree Realty is trading towards the lower half of the 52-week range at around $56 per share or so. And if for some reason sometime soon here, if Agree Realty does drop below 50, I will most likely be buying many more shares for my long-term portfolio. The next monthly payer that's somewhat on sale right now, or at least is starting to get there, is Main Street Capital, or ticker symbol MAIN. Now, Main Street Capital is one of the highest quality business development companies, and once again, just like Agree Realty, if you're not familiar with Main Street Capital, dig into it and do some more research, because I promise you, this is a stock that most dividend investors love. Now, Main Street Capital also has a relatively safe dividend with a 62 on the safety score, making it relatively safe, and with a 7.02% starting forward dividend yield. This monthly paying dividend stock, in my humble opinion, offers one of the highest monthly paid dividends across the entire market, considering how high quality the underlying business is. And just a side note, that's a really good tangent to go off of when it comes to dividend growth investing in general. Make sure to never chase yield. Just because a stock or an ETF is offering, say, a 10, 12, 20% starting forward dividend yield, it doesn't necessarily mean that that stock or ETF is going to get you rich, and it doesn't necessarily mean that that dividend is even going to be safe. So take things into consideration like dividend safety, starting dividend yield, and previous historical payouts, just to name a few metrics. But even though Main Street Capital trading around $40 per share more or less isn't necessarily the cheapest it's ever been, it still is a stock that at these levels, I've been adding more shares of it in my portfolio because of things like the starting dividend yield and the future potential dividend growth. The next monthly paying dividend stock that is also on sale right now and offering a really high starting dividend yield is Realty Income, ticker symbol O, which has an 80 on the dividend safety score, making the dividend very safe, especially for something that's yielding as high as north of 6%. Now, Realty Income is personally one of my largest holdings across all of my long-term portfolios. I currently hold north of 2,600 shares as of filming this video, and I add shares of Realty Income on a very consistent basis. And with the most recent downturn, because of interest rates and other things, Realty Income, in my opinion, has been on sale, especially for someone that has a long time frame ahead of them. But with Realty Income trading pretty much almost smack dab at the 52-week range low currently, I think Realty Income could be offering a long-term buying opportunity for investors that are willing to wait. The next monthly payer that's offering a 4.26% starting forward dividend yield, a 60 on the safety score, is none other than Stag Industrial, or ticker symbol Stag. Now, Stag is an industrial REIT that I've held on and off over the past, say, 5 or so years, and although Stag Industrial has had its ups and downs, it's paid out dividends on a consistent basis and has actually made me some money along the way. Now, what's interesting when it comes to Stag Industrial is even though pretty much all the REITs across the board are red year to date, Stag Industrial is squeezing out a 6.7% return in the green as far as year-to-date price performance. Now, Stag Industrial is currently towards the middle end of the 52-week range, but Stag Industrial not all that long ago was trading at almost $50 per share. So for the investors that want to have some exposure to some high-quality industrial real estate, definitely look into Stag. Another rather high-yielding monthly payer is EPR Properties, or ticker symbol EPR. Now, EPR has a 50 on the dividend safety score, which shows that the dividend is not necessarily as safe as some of the other ones we went through in this video. But just remember, you're always going to get what you pay for. You're going to get a little bit higher yield, but that's going to come with maybe some more potential risk. Now, EPR's year-to-date performance has not been all that bad, up 16.4% without dividends included, and is currently trading towards the middle high end of the 52-week range. But with EPR trading at over $50 and then $70 per share not all that long ago, this could be offering a good opportunity for long-term investors that are willing to take on some potential risk. The next monthly payer that could be offering a decent deal as of right now is RioCan. Now, RIOCF has been a popular dividend REIT for investors for quite some years now. RioCan does have a 60 on the dividend safety score and a 6.06% starting forward dividend yield. Now, RioCan, just like a lot of the other REITs across the board in the market this year, is read down around 15.04%, trading pretty close to the 52-week range low. Now, RioCan is not necessarily a REIT or a monthly paying dividend stock that I would have a lot of in my portfolio, just for my risk tolerance personally. And that's of course because of the future potential of another dividend cut that we did see RioCan do back in 2020 from around 9 cents per share per month now to around 6 or 7 cents per share per month. But that being said, for the investors that are willing to take on a little bit more risk, of course, RioCan could be a good play and is definitely one that I'm watching closely. Now, the last monthly payer that could be offering a massive buying opportunity right now is Apple Hospitality, or ticker symbol APLE. Now, Apple Hospitality is currently offering a 5.92% starting forward dividend yield and a 50 on the dividend safety score. So once again, more of a speculative, a little bit more risky play compared to some of the others. But as far as comparing Apple's performance next to some of the other high quality REITs, even like Realty Income and some of the others, Apple's actually performed somewhat decent so far, up around 4.49% or so year to date, and trading near the middle of the 52-week range. Now, looking at Apple Hospitality's dividend history, this is of course not what we want to see. We see massive gaps as far as dividends being paid, but as of recently, the dividends have been getting paid on time on a monthly basis, even with a massive special dividend that was paid last December. So for the investors out there willing to take on a little bit more risk and potentially want to see some upside, Apple Hospitality is definitely one to look into. Now, like I said towards the top of the video, I personally love investing into monthly paying dividend stocks, and this is because for me personally, this is how my strategy works. As of right now, as a 31-year-old dividend growth investor, I'm trying to gather as much dividend income as possible on a monthly, quarterly basis, etc. because I'm looking to build a massive snowball from different stocks and ETFs and reinvest those dollars as of right now, where I'm at in my life currently, to buy more stocks and ETFs that also pay dividends. And by doing this for around 6 or 7 years now, I've been able to create quite the compounding machine, which now throughout all my investment vehicles, I earn somewhere around $6,000 or so on a monthly basis. Now, the goal is to hopefully do this until the portfolio is much larger than all of my monthly income combined. And then at that point, I can of course choose or choose not to work and will of course be officially financially free. Now, once again, just because a stock pays out on a monthly basis doesn't necessarily mean that it's going to be better than a stock that pays out on a quarterly basis. But that being said, I think that if we were to poll 100 people on the street and ask them, would you rather get paid every 30 days or every 90 days? Most people would probably say every 30. But now I want to hear from you guys down below. Out of all the single stocks we went through in today's video, which one of these monthly paying dividend stocks is your absolute favorite? Comment down below the ticker and why. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.